It's currently about 5 minutes after, so we'll get this thing started. For everyone who's joined, definitely thank you. I have to start off with that. Here at Bay Street, we're always in the mind of trying to provide our clients and future clients and really just anyone in general with information that they can take and learn from. And so with an incoming new administration and with another year of trading, we thought it would be appropriate to discuss not just how we did in 2020 or how the market reacted in 2020, but some of the things that we think we're well positioned for 2021. And hopefully, you can also take advantage of that as well. My name is Ekana. I am the Director of Planning for Bay Street. And so my main role is to essentially help with the financial planning. I do help with the portfolio a little bit, and I think that's a great segue. Will, are you there, Will?
Yeah, I'm here. Thanks again, everyone, for joining. Really excited to speak to you guys about energy. It's one of my favorite topics. And yeah, let's just go. Let's try to do it quick so that folks can ask questions. I think that that'd be a good use of time, actually.
I agree with you. So we will have a Q&A at the end. There is a chat box there. If at any point you have questions, please go ahead and send a chat to us. We'd love to be able to answer anything for you. So moving forward. Will, tell us, how Bay Street was formed, or, kind of where are we going, or about Bay Street as a whole?
Sure. So for those who don't know, I started Bay Street 3 years back. Prior to that, it was the same company, just by a different name. I started out in the call center business, and I was buying and selling call centers. All of our clients were financial firms, and we did a lot of work with retirement plans. So when I started Bay Street, the goal was to advocate for top quartile, or another word for high performing, diverse fund managers. And we've settled in the renewable energy and technology space. So I say all that to say, we've got a diverse team. All the data points to diverse teams leading to outperformance. And we've seen that to be true. I'm glad that, as a team, we've been able to, good job, Agna. As a team, we've been able to continue to add value for our clients. And, our subject matter expertise is renewable energy and a couple of tech names. And we're looking forward to showing you guys some of the processes and steps that we take when we're doing due diligence and work on our portfolio, so that you guys can also make better investments as you move forward.
Yeah, I appreciate the highlight there. And as you can see, when we're we definitely want to put to the front of the line, or not necessarily to the front of the line. We're still evaluating talent, but we do like to make sure that we're trying our part to be diverse there as well. All right, so I'll just highlight kind of where we were in 2020. I mean, at one point, if you told someone that you would have a double-digit return in 2020, they probably would have bet against it. That point being March, we really did see a pretty dramatic slowdown in the overall market, where essentially people were home, just everything seemed to go down, quite frankly. And with bonds then getting adjusted to somewhat of a 0%, a lot of questions of where to put your money, quite frankly, in 2020. And so we did see overall that the market was able to come back and be at about 16.3% overall, including dividends there. But one of the things I would like to just highlight when we think about 2020, I mean, obviously, lots happened over the course of the year. But from a market, some of the things that really stood out is when you look here in the energy, this is a clear red, and that's oil and gas potentially, or mostly. And you'll see a few different sectors of oil and gas, and I'll dive in here. And what we've noticed, quite frankly, is that oil really did not come back, and it took a hit for a couple of reasons. I think one, people were driving less, couldn't really leave your house for a large part of the year, depending on what state you're in, and so oil took a hit there. Somewhat of our oil laws with OPEC were challenged, and so oil took another hit there. Main states, considering California and New York, are making pledges to try to be petroleum free, and really trying to take take out oil from the state. And so it really did take an overall hit, which when you look at what happened in the renewable space, it makes very much sense that we were able to see that a lot of money shifted from not necessarily dirty energy, but oil to clean and renewable space. This was a trend that we saw all year, but really picked up steam as the year went along. And so definitely wanted to point that out. We'll also talk about kind of some of our 2021 projections as well. So definitely stay on the line here, but definitely something just to look at kind of the differences between how oil performed and how renewable energy formed. Moving on. Another thing, as Will pointed out earlier, that we do in fact invest also in technology. We saw technology have just another boom, which is not really surprising when you look at kind of over the last 3 decades. Tech has really led the market, large in part from the S&P 500 to the companies that are in the Dow. Tech has been the thing that's really pushed the growth of the overall market. And if you were to look at the 16% of the S&P that I was showing on the previous slide, a lot of that growth did actually facilitate from, once again, tech. And so, I mean, a lot of reasons for that: people working from home. This specifically is looking at infrastructure. And so people having to buy more because now you have more licenses of going home. A lot contributed to it. But what we think is that technology and renewable energy was not just a 2020 thing, but is going to be something to continue on. And so I'm excited to hear about kind of what we're doing in the future. And then, so as you can see on here, we have our performance from 2020 and some of our top 20 holdings now. I'll actually shut up at this point. Will, what do you see here?
Hey, can you go back to the previous slide? I'd like to speak from that slide to add some color to how we should be thinking as investors when we look at this, right? So again, as you guys know, we use the term renewable energy, and since we're in the U.S., we're a developed country. What it means is that we've already gone through the previous cycles that you see in energy. So, for example, most of the time you start in a developing country, you use wood as your primary source of fuel, right? So if you look at some countries that are still developing, 9 out of 10 people, they're still using wood as their primary energy source for all energy needs. After wood, you transition to coal. After coal, you transition to petroleum. After petroleum, you transition to renewables. So that's the bio, the wind, the solar, the geothermal, the nuclear, right? And a lot of people will look at this chart that Ekana just went through, and they'll see, oil and gas is down. It's, the energy sector has persistently underperformed for the last 10 years. So this isn't unique to last year. It's underperformed for 10 years. And, if you're a value investor, if you're looking for value in an investment where you can purchase something and you get it for more than it's worth, that's a good investment. And so when we use the term lens of history, when we're looking for companies that are going to outperform through the lens of history, it's not just that, renewable companies are the only game, right? It's not that we would never make an investment in something that was taking a country from, let's say, coal to petroleum, or from petroleum, to say hydro. Hydro is renewable, but the point that I'm making is it's not that it's one particular sector versus another. And the other thing that I'll say is there's a difference between investing in an equity position versus investing directly in the project. So for example, although Exxon is down, as a company, 27%, there's plenty of projects that, Exxon will be participating in that require direct investment. So when we're looking at investments, it could very well be that we're participating in investments with several of these energy companies that, from a stock where you would go into your app or something and buy the stock, we might not necessarily be interested in holding the stock, but we might be interested in participating directly in the project and doing some due diligence to see how is this project going to affect the environment. Typically, those are done via like loans. You're literally lending the money. Sometimes there is an equity component there. it really depends on the sort of venture that's in place. But I did want to touch on that because I, for one, think that there is a huge opportunity as these traditional energy companies continue to get pressed down because market is upset with them, and market is treating renewable names very positively. That not only are you going to be able to get them for a steal, but some of these developed companies that are already allocating resources to renewable fuel types and that are going to still have to provide traditional forms of energy to countries that are only using wood or only using coal. There's no such thing as skipping. You don't skip from wood to solar panels. That's not how energy works. The infrastructure won't work like that. Solar panels can't, provide enough energy for a country that's only got wood. You've got to have the whole. You could consider it like we use, we invest a portfolio. You have to have the whole energy portfolio. It's not as if you can only have one source or only renewables as in terms of the technology that we have today. um, Another thing I'll touch on is the types of projects, since I use the term projects. you know so you guys, you might have seen like Nest, like your Google Nest or your Ecobee. They're pushing efficiency. So blow that out and thinking from a larger scale. What are some efficiency projects that are out there? What are some, so that's one project based, just more energy efficiency. If you've got a hydro plant and you can make it more efficient, or if you can take you know a coal facility and convert it to natural gas, you see how can you make that more efficient? If you And then from there, the second one would be like a grid. So you guys have heard of like wind and solar that's giving energy to the grid. And then the last piece is going to be sustainability. And then the third thing I'll touch on here, since everyone's aware of the new administration, is what have they actually said they're going to do? So if you just do a quick search, there's basically 9 things that Biden has said he's going to do as it pertains to to clean energy, and the few that we're looking at as it pertains to how we're investing. One, he's spending 400. Well, they're saying they're going to spend $400 billion, and prior to this administration, a lot of our renewable holdings were international, right? Because of what I just explained to you guys earlier, because you're investing through the cycle, through the energy cycle. Now we've taken larger position in US based energy companies that are framed around renewable, or even North American. So I will say the 2 big ones that we like are Hannon Armstrong. We currently hold an 8% position there, which you'll see on the next page. And then Brookfield Asset Management. I'm sorry, Brookfield Renewable Partners, which is their parent company is Brookfield Asset Management. We used to hold a larger position in Brookfield, but because of this administration and me being of the opinion that when you look at all the federal tax credits, when you look at the energy incentives, it will be a situation where although Hannon Armstrong isn't as large as a company, although it is not as well positioned even as Brookfield, because it's based in Maryland, you follow, it is a US company, there's not much competition they have domestically. And so for that reason, we're expecting that Hannon Armstrong, since they focus primarily on infrastructure type projects, will be kind of an obvious pick for allocators that are looking to participate in these federal dollars that are going to be, generating these jobs. They're saying it's going to create about 10 million jobs for individuals, and it's going to be used to deploy that 400 billion in assets. And I think that because if you look back at like Ekano was touching on with March, when the loans were administered, the U.S. used BlackRock to administer a lot of loans, and they did that because of the infrastructure that BlackRock had, and they were uniquely positioned to be able to administer those loans. I think it's going to be very similar in the renewable energy space, where although there's a lot of names that you can look at, very few of those are based in the U.S. And very few of those are already in the business of lending to projects. That's exactly what Hannon Armstrong does. And so for us, I'm thinking that it'd be a very interesting play, considering it's almost verbatim what Biden is saying he wants to do. And if you look at the stock, again, it's up over 90% last year. So it was a good position for us going into this year. I'd be happy with anything over 15%. Because I'm always happy with anything over 15%. But I do think that, in terms of what I would call the foundation of our portfolio, this is kind of the bet that we've made because of the location of the company, what they were doing prior to the administration, and how they already have subject matter expertise to lend on these projects that are going to need, some type of, I don't want to use some type of oversight, right? So those are my thoughts. Just on this slide, this is pretty straightforward. We run an active portfolio. So all that means is, although we're holding Hannon Armstrong as our top position today, that could change in a couple of months. You guys saw the news on Tesla. They announced a new power inverter today. And a company called Solar Edge, which was currently our number 4 holding, will hold a 5% position of Solar Edge. They're down 13% today just on that news, right? Now, again, Solar Edge has had a great run. It's not like we're going to sell the whole thing, but my point is as the news comes out and as, positions mature, it could very well be that next month, instead of 5%, maybe we hold 4.5%, maybe we're holding 4%, something like this. If the position doesn't correct from that news. If anybody has any questions about particular companies here, I'm welcome to ask them. But if not, Ekana, let's keep going through so folks can ask some questions based on what we've said already.
All right, absolutely. And then I muted myself again. All right, can you hear me now? Yeah?
Yep.
All right, perfect. All right. And then, yeah, as you were saying, Will, essentially, we see very clearly that Biden wants to come in and he would like to, contribute the most that any president has ever committed towards clean energy and renewable energy. So I do think that this is a well-positioned thing. And it's interesting because almost the day before Biden made this announcement about making the commitment and the United States making the biggest commitment, the UK actually made their largest commitment towards renewable energy as well. And I think oftentimes, we'll see a day where, solar or renewable energy are down and we hear, hey, is it still a good time to invest? And I would say absolutely, more times than not. And, just to kind of double down on it, this is what people are talking about. We always look at investments that they really start to kind of boom towards their peak when they're on the news 24/7. And we're barely scratching that surface. And once again, New York finally makes a big contribution towards their own renewable energy efforts, somewhat following of what California did. Motley Fool still projecting a big time growth in 2021. I think, okay, this is yesterday. Jonathan Jones, is exactly calling out how the clean energy stock is soaring. New York Times, it's definitely a rally, and we believe that is sustainable as things have to change. All right, so yeah, I mean, and that's for the most part, that's the presentation of where we think renewable is going. We showed some of what we have currently, kind of our thought processes behind it, kind of some of what we call proof in the pudding that it works based on last year's return, and not just last year's returns, but also really looking at from a government spending point, where is that going to take place? And it's absolutely going to be in the renewable energy space. And so I did conclude, or not necessarily conclude, but I've included a link here. You can schedule. Me and Will both be on the call. Once again, we do financial planning as well. But I would like to open it up now to a Q&A. If you have any questions, please let me know, or in the chat. All right. There's also a Q&A button as well. Give it a couple of minutes. All right. Anything there, Will? No, right?
Nope, we explained it, and everyone's now already bought everything there is to buy.
Okay. I was nervous that would happen is if we did too good of a job, that there would be no questions. But
Or
I
too
mean,
bad of a job, we confuse everyone. One of the two.
okay, I mean, it's one of the two. Hopefully, it's not the latter there. But we'll open up one more time. Any questions from anyone regarding kind of what we just covered? Once again, you can schedule at this baystreetcapitalholdings.com/Ekana. And then I'll bring Will on the call, or you can email us, call us, really any way to contact us. We are here.
I mean, I guess if no one has questions, I can share a bit more of advice just in terms of how we're, looking at things. Again, I mentioned the importance of having a diverse team. I think what ends up happening is you look at opportunities a bit differently. We're not just looking at financials or just looking at technicals or just looking at the news. Um, I was speaking with a group earlier this morning, and a guy brought up the term PPA, and that was something I never thought about. It stands for Power Purchase Agreements, and what that is take for example, if you go to Tesla's website right now, they say, hey, you can install solar on your roof, and you just pay a monthly fee. You don't actually pay for the design and for the installation of the solar panels. So that power purchase agreement, what that is basically you being able to install renewable without any upfront cost to the end consumer. um, and so obviously for the end user, that's great, right? Like if you have a house and you can get something installed without having to spend 20 grand on solar panels, that's good for you. What I think will be interesting moving forward, when you you know layer that on top of things like energy credits and the federal subsidies that will come out of this, and energy incentives, and tax, like the federal tax credits. I think it'd be interesting to see how are companies positioned to take advantage of this, and for ones that perhaps weren't offering things like that in the past, how quickly they'll be able to move as some information comes out around how this money is actually going to be deployed. Because at the moment, I think it's still very high level, which is why we've taken a high level position in a lot of our companies. But I think there'll be some quick movement once it's made clear, like who's actually going to be able to benefit from this. So just kind of keep your eyes open from there.
Great. And then we do have a question here. So, what are the chances for a startup in the energy sector to reach to a level where, let's say, that Tesla is considering the world is transitioning to the RE sector, assuming that's renewable energy?
So this happens not just with startups, but also with mature companies. There's a ticker SALT, if you look it up. It was a company that was they were in the import export. They have these big tankers that ship things back and forth. They are like bulk like tankers across the world, and they've made an announcement where they're going to be selling their entire business, and now they're going to go into uh, water, wind. So they're going to be installing wind turbines, like in the ocean. And so to answer that question, I think there's room for it. I think they were in a dying business, or at least they perhaps weren't as competitive as they wanted to be. But that said, it was a pretty huge business. Like if I look them up, let me check. I want to see their market cap. 200 and worth $204 million. So it's not as if they were just getting started by any stretch of imagination. And I do think, again, a lot of so although their ticker is SALT right now, they're going to be doing a rebranding. So the idea is I think they're also aware that if they can get the capital from this previous business, go into a sector where there's going to be more opportunity, more growth, more jobs, et cetera, that is also going to be looked at in a more positive light from the investor community. And so as a result, the company itself is also going to perform better. Because right now, EV, renewables, it's all at a premium. It's hard to find value. So that's why we're looking at companies like that SALT ticker that I explained just now, and saying, hey, if they're able to pull this off and they see a huge bump in premium, that's an investment that perhaps most people wouldn't necessarily be even keeping their eyes on right now. I, for one, am not a big fan of wind energy for a handful of reasons, but that is an example just to answer the question.
Love that. All right, we have another question here, and it's from Colin. Thank you, Colin. How are you thinking about relative market valuations, earning growth through 2021, and then to follow it up, a stock picker's market versus indexing risk?
Yeah, I think the market is extremely overvalued right now, and it is concerning. That said, the market also has momentum right now, you know. And so you don't necessarily want to sit on the sideline. I think it just requires a bit more monitoring. I know, we speak a lot with our team about, making sure that our clients aren't having to check things on a regular basis since things are moving so much quicker. But I think it's just one of those situations, 2 years back, 3 years back, we just weren't in a market where you had to be glued to the screen because, uh, companies weren't as volatile. Whereas right now, with the sort of valuations we're looking at, and with the way the news, people are following the news. You saw like Elon Musk made a tweet. He said, "Use Signal," and then people went out and they bought a company with the ticker signal, and it wasn't even the same thing that he was talking about, right? People are just extremely speculative right now, and it's slightly frustrating. Well, I will say it's slightly concerning as an investor when we see that the professional investors are feeding into this hysteria. So, for example, I think it's pretty common knowledge that Tesla has now become overvalued, right? In order for Tesla to be appropriately valued, every one car that they sell would have to earn them $1.3 million at today's price. And that's just not happening right now. It's so far from where they're actually doing from a revenue standpoint, that new stories are coming out about how they're going to actually justify current price targets. But banks are still increasing the price target, right? So earlier this week, the street high was $900 was going to be the target price. And then yesterday or today, someone just announced 950 is the target price, you see. And so the question is, if professional investors know that this is overvalued, why do they keep encouraging the purchase to run up the price by increasing the target price and justifying it with expectations as opposed to fundamentals, which is, again, typically the market's it's greed and it's fear. Those are the two things that kind of drive price. And right now, I think the market has become extremely greedy because, in one side of your mouth, you're saying this is overvalued. And then the other side of your mouth, you're saying the price target is now $50 higher. So, and I think that's, again, happening kind of across the board. Things are kind of all over the place. But that said, you don't want to not participate. You just want to make sure that you've got your entry point, you've got your exit point, and if you can, catch something while the market's on a run, you've got it. And then once you've kind of put your investment plan in place, you can say, "Hey, I'm ready to get out now," and you can wait and see how long that drawdown lasts. But I do think that that's something that, you can't say it's coming or not, but it looks like it is. That's my opinion.
Yeah, I've definitely heard that it's a momentum market, and I think the Robinhood traders sometimes prove themselves right with that. And so we don't have any more Q and A's. We can give it a moment, see if we get anything during the last stretch. But this has been very helpful. At least I hope that it's been helpful when we're trying to deliver the information. We definitely want to do it in a way that we think people will be able to understand it. So we definitely appreciate that. Okay, we have another question here. I'll bring it live. What's your view of individual project developers in renewable energy sector?
Um, just to make sure I understand the question, I think what they're asking is, what is my opinion on the companies that are doing the development from an infrastructure standpoint? And if that's the case, if that is the question, my view is that they've got confirmation based on, the Senate going to the Democrats and Biden being able to say that, hey, this is what we're going to do, and no one being able to stop them, right? So, from my view, you've got very established companies like Georgia Power, like NextEra, the list goes on, like Dominion, et cetera, et cetera. And if there is something that they want to do from a project-based standpoint, I think that they're going to have the federal support to do that. And I think what we'll see is an increase in valuation of these companies as they actually start explaining how they're going to allocate those dollars. So my general thought, it's a really broad question, but my general thought process is that they're in a good position, right? Rather you be GE right now, like for that's great. So GE, traditional energy company, you look at their stock price has kind of been in a downtrend prior to COVID and all that. But they just announced this new wind turbine that's producing like multiples more energy than people ever thought was possible, right? These things are humongous. I mean, they're like 9 times the size of previous wind turbines. And that's good for GE, right? It's positive news. Like whether you like wind or not, like the point is they've got something new. The government's into it. Hey, you guys go build some wind. They're saying that they're going to need like a tenth of the turbines in on site because these new turbines are so big and they're generating so much energy. They actually said 1 turn of the turbine is going to power a house for like a month. Like they're saying like it'd power like 24 like houses for like a couple of days. Like it's some crazy like metric you wouldn't even think that 1 cycle of a turn would do. And so again, I think they've got momentum because at the end of the day, they've now got government support for projects like this to move forward, kind of regardless of how much it would have cost. You follow?
Yeah, thanks for explaining that. And that was actually confirmed. That was the question. So you're right on the spot.
Okay.
Yeah, we love the Q&A point. This is what we wanted to get through. Any other questions for anyone? Once again, you can definitely reach out to us. We can have one-on-one as well as doing the financial planning as well. All right.
That's it, man.
I think that's everything. Yeah, they're saying, hey, thanks.
Cool. Well, thank you guys too for hopping on. You're awesome. Oh, someone actually put the new GE wind tunnel. I didn't know the name of it. So it's called HALIADE-X. Yeah, check this out. I mean, it looks like there's like a 1-minute YouTube video or something. I was recanting this from memory, so some of my numbers might have been off, but check it out. The thing is massive. Cool. And again, we appreciate you guys hopping on. We appreciate the support. Looking forward to progression through this year with you guys, and hope we have another great year like we did the last 2. So
All right, later.
Cool. Thanks, everyone.